Welcome back, everyone. So, this was a screenshot that I showed you in my previous video. So, as you can see here, I showed you how important P2 is, as you can see reversal, and then I proceed to another reversal. So, as you can see, that when you really zoom in, they didn't actually hit that P2, as you can see, they fell short of it, but a lot of the times, mostly, you can say all of the times they hit the P2. Okay? So I've showed you everything. This is everything is there in the previous video, so watch that one. So today we'll be focusing on this one. So this is we got a black box there, 1, 2. Let me zoom in on this one. We found the black box, 1, 2, these two candles. The third one traded halfway and then moved up, right? That's a buy right there. That's a buy. And then I told you to take partials if you want to. You can take partials at the TP7 of this one, the two previous candles, the two bundles. This is two candles. You can take partials. This one is TP1 will be found there, TP2 and TP7 will be upset. So you will take partials there. If the candles are very very small, just like this one, anemic, so you have to use the wicks, just like this one. You cannot use the bodies. Why? Because when you measure the body, it's gonna be right there, and there is no opportunity at all to enter. So you use the wicks, equal wicks, just like the classical black box, equal wicks, and then you project your TP. Okay, and then you project your TP before the third candle as well. Okay, so that was a buy. Right, there was a buy, right? Then profit, then you or in profit, and then finally collapsed and hit our stop loss down. Just before that, it formed another black box, right? So you use this black box's body to project TP2, as you can see down there, and you use this the newest black box's TP2 to take partials. So as you can see, for the previous black boxes, once the price hits that TP2, look the reaction. So is it better to take partials down there or up there when the price returns? So it is better to take partials right there at the lowest possible price level as the maximum money. That is the maximum money. Okay, maximum profits down there. Then you took partials. You don't care if price retraces. You don't care. Your stop loss still up there. Then you are aiming for TP3 down there. Sorry, this one. For this one. But for this one, it is gonna be this one TP3. This is TP2. So when you are entering based on this black box, your TP2 is gonna be down there, not there. Why? Because you are trading based on this, not this one. This is for directional purpose. I already told you about this. This is for to find the direction, to find the TP, the price where the price might reverse. Okay, it's like I said. Look at that, 3%. bullish hammer rising. This is a freaking bullish hammer. This right here is a bullish hammer. So you take partials. So you entered, you might have lost for this one because it ended up in the certain model. Because the black box is this one. It popped a little bit and then it dumped. But we are sniper. We are entering upside, not downside, based on this black box. Okay, beautiful execution. TP3 and price just dumped like crazy. So I told you that take partials at TP2, take partials at TP3, and then late other. After TP3, you can't trail your stop below your entry. If that was your entry, make it little bit lower, and then relay the other. Okay. You can even put it at TP2 after TP3. After the price has moved a lot, you can make it down there at TP3 below TP3, okay? Because most likely this is TP3 is the last resort, as the last place as the price is gonna visit. After that it will change direction, bam, then bam. Welcome, eating your profit. So after that incident, after that trade, what happened? We found another one. 1, 2, 3. Okay, these 3 candles formed the block. So and what happened? This broke. That is a sell down there. Stop loss still up there. Okay, stop loss up there. What do you do? You sell it. And then I told you that based on these candles, based on the previous 2 candles, you can project a TP for this breaking candle, for the third candle, and then take partials there at TP2 and TP3. Okay, especially at TP3. TP3 is a place to take partials for this third candle. And then after the third candle has closed trading, then you project based on the 2 candles, same lowest price, and then the breaking candle or the third candle, and then TP2 will be found down there, as you can see. I mean, TP2 is down there, as you can see. So after the price hit that TP2, look the reaction. It came back at you. It came back up. It ate your profit. So that's why I tell you to take partials at TP2 is very important. Okay, it's very important. It is very important. So what do you do now? You took partials, stop loss still intact up there, you wait. You don't care if other black boxes fall, but you can take a trade based on the new one. So as you can see here, this thing broke, you sell. That is a sale for this one. There's no two candles brown. Okay, this thing broke. That's a sale too. That's a sale. We are not putting a lot of money. At the first place, your risk, I told you, your risk should be below 5%, less than 5%. The first reason is because the black boxes form more frequently. You can be sure that you will spend more than 10%. So limiting your risk to less than 5% will give you more room to enter more trades. And those more trades Wait, the play out, it is gonna be all green. It's gonna be all blues. It's gonna be profits everywhere. If it doesn't play out, it's okay because the others will play out, and you will get your money in the other direction. That's why the black box is crazy. If you use in one direction, you can't be sure that you will make money in the other. That's why we have an edge. We have money. So if you can see you interested, and then what happened here? Let us see. Alright, this is another. Let me get back here. Yeah, there we go. There we go. Based on that, we should raise it. Right? So it came back down. Our stop loss still up there. So this one traded down and made another black box. That's another thing down there. Then we measure from the wicks because it is anemic. Then we take partials at TP7 for this breaking candle, for this big candle, okay? And then it went, we were in profit, as you can see. When you measure it at TP2, I told you take partials. I already told you at TP2 take partials, right there. Fulfilled, bam. Fulfilled. If you put a horizontal line, TP2 is neutral. What does that mean? It means take partials. Stop loss still up there. Okay. Alright. Then the price just went rogue. Why? Because it has already delivered. For this one, it is still not delivered. For this one, not still delivered. But for this one, it is done down there. It is done down there. Okay, it is done. So, in order to fulfill the TP2 for both this one and this black boxes, the price just changed direction and beautifully fulfilled the TPs. Up there, TP2 for this one. Up there, TP2 for this one. It got close. It got close. So that doesn't mean it hit it. So some of you might wait for TP2, okay, and that's okay. That is okay. It is okay. You made a profit on the downside, and you entered the trades upside. Why? Because there was no black box here. On this run, there was no black box. If there was a black box, you would have entered the trade. Okay. Some of you might say, oh yeah, this is a black box. 1, 2. Yes, it is. This is 2 candles, but the third one didn't trade down. If you measure this, the bodies, and see if 23 point, and see if 23.6 is hit, if 23.6 is hit, that is fulfilled. But that candle didn't trade down. It should have traded down. It should have traded down. It's an military trader, but unfortunately it didn't. So we abandoned that shit. So we are already entering the trade ups based on this. Okay. So on this run there was no black. That's why we are entering upside instead of downside. Whatever it is, we still made money. We still made money. Okay. So I have already talked about taking partials. I mean, price runs near your TP2, near when the price is really near your TP2. Actually, most of the price hit TP2, but some of them come near, very, very near, just like this one. It is very near. It is almost 10 ticks or something, and then reverse direction. This means we have to hit TP2 for this black box by changing the direction to the downside, just like this one. Because TP2 was not hit. The algorithm does not know unless TP2 is hit. The algorithm assumes that unless TP2 is hit, we have to seek that TP2, whether it's in the other direction or in the same direction. So the algorithm will try to seek TP2 if it changes direction. If it does not, then it will suppose this and move up and hit TP2. Anyways, okay, so I have talked about this. When price meets TP, take partials. When price meets TP3, take partials. When price meets TP2, take partials. It is not a new thing. I am trying to mitigate risk. I am trying to protect you from a loss. And I have proved this scenario over and over again. You can watch my free YouTube videos. It's everywhere. I've talked about this. It's not a new thing. I'm not adjusting my words based on the situation here happening. I'm not trying to make myself a saint. No. It is all there. It's all proven. Some of the prices might come near your TP. It is not an error. It is not an error made by you. Measuring error. It is not a measuring error, as you can see. Actually, I didn't measure it with downside because the body is cut off downside. Can you notice that? Do you notice that one? The body is cut off downside. Actually, I didn't measure it correctly. If I cover the body, the TP will rise to the upside. Why? Because the Fibonacci will get wider. If it gets wider, the TP will increase. If it gets smaller, just like this one, the TP will be smaller. As you can see, it is small. That's why I tell you it is based on the height of or the range of the black box, from the high to the low. If the range is very, very high, the TP will be high. And the price run will be huge. Candles will be running like crazy in that direction. So as you can see, so don't forget this. When price comes near your TP, take partials. Near, very, very near. It's like hitting. Okay? So I wanted to show you there is also this kind of things happening in the market. So you don't have to be confused. When this thing happen in front of you, don't be confused. Expect it. It is a little thick. It's a little money right here. So it is better to take partials right there than when TP2 is hit, waiting for TP. Okay? Beautiful. So we are clear on that. Let's come back here. So what happened? Is the same thing that I told you. We sold. TP2 nailed down there. And that's beautiful. That's what we wanted. I'm sorry, TP2 was down there. So you can see it here. Right there. After TP2, then price reversed that. It's expected. There's nothing new under the sun. Everything is as it is and as it will be. So that's it. So let me go to the next one and let me quickly brush some things. Okay. So do you see any black box? I'm saying. Let me zoom in for you. Do you see any black box? Yes. Where? Up there. And this one. And this one. And this one. Why? Because it traded 23.6 Fibonacci extension. I told you it does not have to come halfway or all the way down. It can trade a little bit down and then move up still. That's another secret for you. Because you are a part of the inner circle now. The black box is inner circle. That's a secret right there. Okay? So this is counted as a, you can measure it. You can measure it. Okay, let me show you the date here. The date was down there. As you can see, 27 August at 16 o'clock. Right there. You can measure it by going on trading. That's I think 2024. It is 2024. Okay. It is not 2023 or 2022. So that is a buy. Where? Up there. Up there is a buy at 2.5%. Up there is a buy. Aiming where? TP3 for this black box. It is up there. TP1, TP2, TP3. Okay. You can measure it. Then after that, price top down and fell down. It fell down. That's it. That's the business object. There is no black box here, as you can see. Nothing here. Then this thing formed. Bam, the first candle, the second candle trailed down, the third candle trailed down. Where? To where? To the 50%. It is even better. It is even better. When they overlap from each other like this, it is better. It is gonna move like crazy. So as long as this thing showed us a direction, that is a sell down there. I don't care if it comes back up. I don't. Why? Because I expect it to be hit. It's a must. It is a must. But there are some scenarios that it gets near, and collapses to opposite direction. But in the opposite direction, it hits the TP to nevertheless. Okay, that's a sale right there. That's crazy. Catching the freaking top of the market, riding it down. That is ridiculous. And there is no freaking supply or demand, so there is no freaking news. So Paul is speaking. Well, where is euro-dollar gonna head now? Come on. NFP. No one cares about that. No one cares about that. They are murdering us. They are playing puppy. They are puppets for the big bucks. These people who speak on the media, they are puppets. Okay? Don't think they are helping you. No, they are actually killing you. They are actually killing you. What they talk inside their room and what they tell you here in the media is totally different. It's totally different. It is a distraction is being applied inside that inner circle of that evil organization. It's everywhere. Every manipulation you see, every news reaction you see is because of that. They tinker with the algorithm. Because no one says hi to them. No one directs them. No one orders them. Everything is in their hand. They can eat whatever they want. They can play whatever they want. They can kill whoever they want. They can demolish whatever building, whatever home they want. And they tell you it is for the development of the country. So you gotta relocate to somewhere else. And they will demolish your home. You do nothing. You are not above the law. They make the money, they make the law. They are the big daddy. If you dare to oppose them, you are thrown to jail. You are obstructing law and order. That's what they say. Anyways, their doing is evil. It is pure evil, and I don't know how we can protect ourselves from this clowns, con man, this con man. So, as you can see, it's here, right there, down there. Stop loss up there, and you wait, patience. Another format, bam, bam, bam. This broke, but never broke the law. We are not interested. We wait. 1, 2, 3. It broke. I sell again. My previous sale was here, and I measure the TP2. TP2 might be around here. I take partials. I enter a trade again, as you can see, and then for this candle, I measure TP3. I take partials for the breaking candle. If it closes up there, I don't care. I will take at TP3. I will take partials at TP3. And then what do? I measure after the third candle has closed the trading. I measure where TP2 might be. Look at that shit. Is this a coincidence? No. You are getting out at the best possible price. Even though it went down a little bit, this is minimal. This is minimal price. This is beautiful. This price you cannot get. So as you can see, the market came back up and eat your profit. And it can even reverse directions upside because TP2 is already hit. And this setup is gone now. Yeah, okay. And then what happened? Still in profit. I am from the above direction. I'm not out. I didn't get out. From this direction, I didn't get out. Still riding the wave. And then I'm waiting for another black box. Nothing. It dumped. And then down there. Down there, what happened? Nothing. Nothing happened. TP3 hit. And then dumped it down. So after TP3, I told you to move your stop loss. You can move your stop loss like this. Okay? It's based on your personality. The price action is unpredictable based on this. So this is the whole business here. Okay? This is the whole business. There was a buy and an entire sell session. So based on the daily candle, you can see that just this rectangle, this candle, assume, and then they traded up. That is a week. This trade up is this week, and then they traded down, and then they made a week. What is this week? This one. This week to the upside. They traded down. That is the low of the week. This is the high of the candle. This is the low of the candle. This one. What you are saying. And this candle traded up. That's why it is a week. If it didn't trade up, and if it was a full-bodied candle and it closed it down there, then the candle would be just like this one, full-bodied candle. Okay, beautiful. So let's get back to the next one, and I'll finish my video. I mean my recording, because I have to eat lunch. Okay, it's lunch time. It's lunch time, and I'll catch you in the next one. So what is this? Do we have a black box here? Yes. Where? Where? There. Two. The middle one, three. What happened? It broke. It traded up. I entered the trade up the upside. The worst case scenario. It is the worst. Then it broke the downside, hit my stop loss downside. What do I do now? I sell. I sell. Now I sell. Okay. Now I sell. What exactly is this? This is the force model right here in play. Bam. Boom. Do you see what I'm saying? Are you seeing what I'm saying? We broke the downside first. Then we broke the upside delivered. And finally we dumped the downside. The real TP. So these kinds of things might happen. So that's why I'm telling you. To enter less than 5%. There is a reason. There is a reason. Okay. So this is the absolute worst. It is the absolute worst. Absolutely, it is just a murder. It is a freaking murder, right? So as you can see, traded down and then up, and then finally the real direction is the downside. Traded down. So, anyways, our stop loss is down there. Okay, and our stop loss hit up there. This one. By this candle. By this candle. So we are not entering anymore tonight because we got a new black box here. 1, 2, and 3. Did it break anything? No. What about now? Yes. Yes, it did. But as you can see, our stop loss down here and our entry up there. Is this worth it? Is this worth it? No. This one. No, it is not. I'm not gonna give my money just for this buy. And my stop loss down there. It is a huge stop loss. And I am not forced to do this. That is why we are training ourselves. Okay? We already lost money on this one. 2 times. 2 times. And I am not giving any more money. This much money. No way, that's not gonna happen. This is an indicator that we are not trading this one. Then what happened? We will abandon this setup. Another black box. 1, 2, and 3. And it broke the downside. We can use this as a directional purpose stick, but we do not enter it because of its huge stop loss and a huge range. We can't do that. We can't. We can't. Then what happened? That's a set. Are we entering it? No. Why? Look at that. Our stop loss is gonna be up there. Our entry down there. Look, another huge risk. Not gonna happen. We abandon this one too. but we can use this as a directional indicator from the low, from the body to the body. When we measure it, I think most likely it was nailed. That's why we changed gears, we changed direction. Okay, so these kinds of things might happen, so it is best to avoid them. It is best avoid this, avoid this, and trade this one. You can trade this one. Okay, do you see? Do you see what I mean? For example, this is a big lesson. Right, a big example. Then afterward, there was no black example. Oh, I mean this one, right? I'm sorry, this one. There was a huge, this one. Then that is where you buy. That's a big move. That's a big move right there. So it covered these losses. It covered these losses. That's a huge move. Beautiful. So, and this one I have already told you about. We sold that thing down there, and then this thing went down and broke Earth and went to hell. So this thing went to hell. So I already showed you. It is this one, right? It is this one. This is this one, and then that's our cell. Look at that. After this horrible price action, we still got our money back and even more profit. So that's beautiful. That's amazing. It's amazing. Anyways, so this is next race that I'm gonna show you. So I'll see you in the next one. I'm excited to show you the rest. Okay. So let me go and eat my lunch, and I'll come back and show you everything. Okay. So thanks for watching. Peace out. Hello everyone, welcome back. So this is the next episode of live trading with a black box, right? So right there, just now I got out of the trade right there. My TP2 was right up there, and my entry was around there, down there. Okay, and this is the power of the black box. That is just amazing delivery. So my initial target was this TP2 right there, this black box TP2. And then the next target was up there and I nailed it, and look what's happening. So I'm still in trade with on Aussie card. On Aussie card I'm still in trade, and of course I anticipated that there would be some kind of retracement right there, because as you can see we hit TP2 right for this black box. We already hit TP2, so we would be anticipating a retracement, a pullback, or some kind of week and then continuation, right? That is how it goes. That's how the market uh, moves, right? It moves in pullbacks, impulse, pullbacks, impulse, pullback, impulse, pullback, impulse, right? This is exactly how market structure. This is how market moves. So you would see some kind of retracement around it. So maybe I would be forced to get out here. Why is that? It is because ITP2 is based off of a bigger black box around here. It is around here, okay? It's around here, and TP2 is up there. So it's gonna take a lot of time and a lot of retracement. So I think holy shit, what is going on? I think there is no point in staying here. As you can see, they are attacking the Aussie card is crazy. Let's get out of here and I'll show you everything. Just get me out, Jesus Christ. What kind of idiocy is this, bro? Holy, look at that shit, bro. That shit is still pumping. Nobody cares. So here, what happened? Where was my entry? I think my entry was oh my god, around there. Yes, it is around there. As soon as price supported that line, I was buying. I paused that shit. Price dumped, I don't care. So look, that color right there that you are seeing, the box is right here also. I don't know what color it is. I think green. Oh my god, I got out too soon. That is just crazy. That's just out of this world. So that color right there, what you are seeing, is possible resistance and supports. Okay, how do you determine that? It's because of this candles close, and look where price pumped up. That shows your bullish power. That shows a bullish power, right? As you can see, this candle's top has no upper shadow. Does it have? No, it doesn't. It doesn't have an upper shadow. It doesn't. What does that mean? It is a full bullish bar. It is a huge momentum. A bullish side is getting momentum and power. So we expect bullish pump, not a bearish one, right? A bearish candles will be smaller and bullish will be huge. Bearish will be smaller and bullish will be huge. So that is the exact definition of bullish trend, the bullish trend. So I was interested in what the price was gonna do. I was interested in seeing what the price wanna do. So right there, I placed a box, a rectangle. Then I wanted to see what the price wanted to do. So as the price reacted off of it and then pumped upside. That's a good side. But if it had dumped, then
I would have considered getting out. First, I would be waiting to see if it reacts off of these black boxes. I'm sorry, black box gap, right? The middle of the black box gap is called the midline. The midline. The middle of the silver zone is called the mid-axis, right? The middle line of the, the leg of the third model, like this one, like this one. This is the third model, right? This is a black box. What you are seeing. We dump it, then we pump it again. Support, then pump, right? Holy shit, that shit. I got out here, bro. So emotions got the better of me. Not really emotions, actually. It is not an emotion, but a target problem. The target that I set for this one was a previous black box, right? Not around here. It is not around here. That is why I feared. I should have trailed my stop there and then let the other run, but it's okay. It's okay. We made money today, and that is huge. That is huge, baby. Let me show you the history. You would be flabbergasted. Look at this all blues. Look at this all blues. This shit is crazy. Everything is blue. Look at this shit. Is this a coincidence, bro? No. This is work. This is hard work right here. This right here, what you are seeing, is a product of hard work. It's not because you have a million indicators. It's not because you have a fast computer. It's not because you have a faster whatever equipment you have. It's about also strategy and how you deal with it. How you deal with it. This shit is working. Look at that shit, bro. This shit is crazy. Look at that. I only lost 2 and 3. The others are all winners. Shit. That is just crazy, bro. Look how far you come, right? Aren't you glad that a part of this? Aren't you glad that you are the part of this community, right? Community that just prints money. It just prints money. If it doesn't print money, then you know what is wrong. You know what you are doing wrong. You know how to deal with it. When you enter the market, you are happy, right? You are not in fear. You are not shaking. Oh my God, what if I lose this money then? No, you don't do that. You don't. It's just crazy. And my God, I don't know what to say, man. I don't know what to say, man. So this is how it got. So that's exactly my entry. Sorry, guys. Yeah, I mean, shit happens always. So, anyways, so that's it. That's the whole thought process. So I'm not gonna lie. Initially, intraday sale right there. I think it was around there. So you can see it as the history, right? After that, where is euro dollar? Not GJ. Yes, euro dollar right here. So I lost 60 cents right here, as you can see. Then look how much I made. That is complete distraction. That is complete. Look where I entered. That is not luck, bro. Luck has nothing to do with it, bro. You think this shit is luck? What is the last week, bro? You think this shit is luck? Look at that. Of course we're gonna have reds, but look the blues, right? Around here, yeah. Euro houses, right? Aussie dollar, Jesus Christ, yeah. Euro Aussie and Euro Aussie, as you can see, 4 of them. It is 5 even, that is crazy. 4 of them, as you can see, Euro Aussie was crazy, bro. That day, bro, it is all my fault. It's all my fault. So what happened was, it was in some kind of third model scenario, right? Price bumped, so supported, I entered a buy. Instead of waiting and putting a stop loss down there and waiting, price dumped. It dumped the downside and disrespected every line that I drew, right? The mid axis, the mid ordinate, and the midline. Then I got out when it dumped down there, so I thought it was gonna collapse to the ground. But what ended up happening was crazy. That dump turned out to be a wick, and the body closed just above the line. Respected that shit. And then the next candle traded lower a little bit and then pumped upside, and I lost there. It's just crazy. Just crazy. So all my shit, all my mistake, they have all written about it around here. So you don't have to, just don't believe me just because I told you. Right? You don't have to believe me just because I told you. So lessons learned. lessons learned right here, okay? Correctly measure the middle of the silver zone, otherwise you want to know which way price closed, right? Or the middle of the silver zone is called mid-axis. You want to measure the mid-axis correctly. You want to connect the bodies with the bodies. If you mess up there, I promise you, you will be wrong on the bias, on the direction. That is gonna determine where the price has closed with the body. Is it up there or down there, right? So we want to be careful there, around there. And next, closely follow the trade, watching key levels. Help us in exiting soon, and then even entering a new position in the new direction. That's right. You want to watch what the price is doing. If you are trading the 4-hour time frame, then you cannot sit for 4 hour time for 4 hours, right? So what you wanna do is you wanna let's unplug this. What you wanna do is you wanna wait. You wanna trade the lower time frames like the 10 minutes. So as you saw, I'm trading the 10 minutes. And the 10 minutes gives you a lot of movement and faster uh, volatility, and then of course money will be a lot too if your account is huge, right? So if you are trading a lower time frame like the 5 minutes, the 10 minutes, 15 minutes, anything below the 15 minutes, then you want to watch what the price is doing. At least enter the trade and then check it back again, right? You want to see what the price wants us to do around those key levels. What are those key levels? The mid axis, which is the middle line of the silver zone, and the middle line itself, which is the middle line of the black box gap, and we have the mid ordinate. The mid ordinate is the middle line of the third model's leg. You want to watch what price wants to do there, right? So let's assume this is the black box. Price dumped and then we bump it up again. So you are anticipating it wants us to move up, right? So first thing you want to watch is this middle line, which is mid axis of the silver zone. This is called mid axis. The next thing you want to watch is this right there is called mid-ordinate. This leg below the silver zone to this, the middle line is called mid-ordinate. This mid-ordinate will be used for price support, right? To pump or to do what? Ever it wants, like sell or pump, right? Sell or buy. So that is the whole scenario. You wanna watch what the price wants to do at key levels. Don't. The next what? GJ indices found out zero hours require a lot of money, so don't enter them. So I'm trading micro lots, so I'm warning myself. After price reacts to key levels, wait for the third candle to form, right? Just because price rejected the key level doesn't mean that's an entry. At least wait for the second candle to form and see where the price wants to go. Wait for the second candle to close. After the first candle has reacted off of, then the next candle forms, wait for it to trade. You wanna wait. Then at the third candle, that's where you take your action. Or at the end of the trade of the second candle. If it is a 10-minute time frame, then you wanna watch this second candle at exactly 8 minutes or 9 minutes. You wanna see where it wants to close. That's it. Then it is better to enter late than enter randomly, alright? Lose money, you will lose money. It's better to enter late. Okay, it is okay. Then I entered a random sale just because I trailed my stop to close and got me out of the trade before hitting it. Right? So I was in a sale on Euro yen, and then I trailed my stop, so it went to profit. This was my TP2, and then this was my entry, and then the price just got there. I told you right there you take partial, right? So I cannot take partial because it's a micro lot. So what happened? I trailed my stop there. Then what happened? Price pumped, got me out of the trade, and uh, I entered a sell again. After getting out of the trade with a profit, I entered this, which you can never do. There was no black box there. There was no setup. There was no reason to enter there. Just because it didn't hit TP2, I entered the sell, targeting this one, and my risk also, of course, covers the whole black box. That was a dumb mistake, and that will never happen again. So that's right there. That's what I'm talking about, right? Okay, that's the mistake that I made. This is the whole thing. So I'll see you next time, and we'll hopefully answer your questions and see where it goes. Okay, right? So I'll see you in the next one. Okay, thank you for watching.